commencing 8th of July analysis. So let's start with the economic calendar. So nothing much, basically just quiet. Just one piece of news. On Monday, nothing happened really, not much. Relatively simple price action. So the simple manipulations as you can expect them. Uh, Obviously this here, and what else have we got here? So Thursday is, I think, the only to look forward to. CPI core inflation. So probably Wednesday is going to be lackluster, anticipating that bigger run. Range contraction might occur on Wednesday, day before. Then you have Friday. Again, nothing much, just 1:30 news. So that's your economic calendar, relatively lackluster, not much going on, as I said, because NFP already happened. Now, NFP, it wasn't that much explosive last week as we would have expected it to be, you know. Um, but nonetheless, we did manage to close below the weekly fair value gap, which is key. If we did not close below that, the body's inside, then it would be different, the perspective that I would have held. But because we closed, that would give me some reasonable grounds. Again, this is still not high probability in my view. I think we can still, very easily go here, take this high out. So that was the original draw liquidity. We've been looking at this for a few, since 6th of May, since it was here. Basically, I've been looking at that, because ultimately this was the goal, and maybe this, right, from really hard time from macro perspective. But on a micro perspective, lower time frame wise, weekly and daily, because we closed this, I would reasonably expect this. Well, let's put it this way: I want to see if this acts as a resistance for the week, okay? Because I don't know if it will, and obviously we know this is not a fair value gap CB right now because it requires 3 candles. We don't have that. This is a live candle. We don't count that, okay? Now, so far, Monday closed below this, okay? Mean threshold. So that's a pertinent sign. Even if he was to, let's say, go here, suppose, we can still pull all the way back up here, although very unlikely, because if it does, then again, that's again going to lend really well to it being choppy and not really, one directional, risk on, basically, if it pulls all the way back up here. But even in that case, I would still expect body to be below this. But a nice and simple scenario is we opened up for the week, okay? I want to see this body on the body basis, not close above this, but maybe creep up a bit here. This daily fair value gap, when this candle closes, then this will be a fair value gap tomorrow. So maybe stay inside, use this as resistance, and then want to head lower here into this, this low here, daily, and maybe this here. So far, again, preliminary. That's where I think the direction is. Again, I'm not really convinced, basically, of a direction here. I'll be honest with you. Yeah, I think it can go here. Gun to head, I think it can. This is more likely. This is more likely to happen over it going up. Okay, but again, gun to head only, because the price action isn't really that pertinent. I was expecting that NFP to, you know, if it's not going to go to this draw, then at least, be really aggressive going lower at least. But it was not really aggressive, so slow, slow price action. But yeah, this is gun to head. Normally, we expect the counterparty to occur Monday to Tuesday. So if you assume that it's going to go lower, then reasonably expect this to go higher. Okay. So euro obviously opposite this daily fair value gap, your weekly support most likely, and then this is your weekly draw. This, if we get, so this low here is this high, and then this 4-hour fair value gap is something I would reasonably expect to be overlapped and closed. We opened up with a gap, and look how quickly we closed that. Same here. We closed that, then we went up. So I actually didn't really, because I didn't really know about the higher time from that much. I, didn't really do my analysis Sunday because of some family things going on. I wasn't with a higher degree of precision. I wasn't in London. I didn't wake up for London. I left it. Came in New York. I saw that, even though I wasn't really that one-sided, but I like the fact that we trapped these shorts here, went higher, left. Well, we took this high out, but then left this low, you know, unrated. Okay, and that obviously SMT'd it here, but also relatively equal lows were created. So I really like that. And then also, cherry on top, right before New York opens, what do we see? A decline, a sharp decline internal inside the range. That is a textbook long setup or short setup if I flip the conditions. Because you're engineering liquidity. Well, okay, step by step. You're trapping the opposing counterparty liquidity, okay? Then you're running against it. Then you're creating new liquidity, for new sellers to come in or new buyers to buy stop it here. Then trap them again. The new session opens, bear flag it here, so people sell it, and boom, take them out. So maximum damage. That's the purpose of these markets. Maximum damage, carnage, basically. So that was beautifully done, I think, here. I must give it to it, actually. It even got me excited here with this move that it's going to go lower. Which I think we could have done a better job, to be honest, but again, it's a learning curve. We could have matched it with this bullish market structure shift, realizing that this is equal and not taken this out, and would have waited for this to be taken out, only then shorted it. But anyhow, we still managed to, when it went higher, took us out real quick. That was a suspicious red flag because that was really quick. As soon as it happened, yep, it's already trapped people, and now it's gonna run real hard. Not gonna give them a chance to get out, okay? Because people don't use stop losses. That's why it goes really hard. Because they're just scared and they're like, oh, okay, I'm not gonna close now because it's too deep in loss. But yeah, we captured this here with a 5 pip stop and 2R here, beautiful, of this high, and recovered the loss, made profit, boom, closed the day. So that's part of the learning curve. Your old months will be like, what the fuck is going on? This is sideways, right? But I know like how to engage it with the time elements, with the price elements. So yeah, overall, my expectation for the week, like I said, risk on, okay, into the 4-hour fair value gap, weekly support here. Again, don't quote me on it. I'm probably still gonna have a better idea middle of the week what we're gonna do right before CPI. So I think that's should be all for today.